Hello, traders. The very thing that I did not think would happen, happened. Let's take a look. That's the markets for you. I didn't think that we'd come crashing down, that we would either pop today or go sideways, and that chances are unlikely that we'd come crashing down. We're down almost 3% on the Dow. That is ginormous. Do not try to look that word up. I promise you will not find it in the dictionary. 3.7% on the NASDAQ. 3.3% on the S&P. 4.3% on the Russells, with a ginormous pop of 14%, almost to 50 on the VIX. That is very telling. Here's what I was saying. Let's zoom in. We dropped 1, 2, 3, 4, 5, and now 6 days. We're due for a bounce at any time. However, let's look at this. We have a hammer here. Usually hammers means hammering at the bottom. We should pop up. Popped up just a smidgen, then come crashing down, busting through these moving averages. And then we had another decisive move to the downside. And then right here we have a spinning top, reversal pattern that should pop to the upside. Let me go back here and shrink this down. You see this green line. We have resistance, resistance, and we are right here at that area acting as support. And we come across right there on that swing low, this big red one coming across, also support. Two major support areas. And I really thought after a 5-day drop that we were due for a bounce. It did not happen. We come crashing down. Retail numbers come out. And that was just enough to send things down. Financial sector is just crashing and burning right now. What is really incredible is that we busted through the 860, we busted to the 850, now we're almost ready to bust to the 840 area. At one point we were below that. So let's go back and see where there's some support areas. And let's draw. I'm gonna drop a couple lines here. I'm doing those lows right here. You can see where it's acted as resistance and support. We just cut right through it. And let's go down here. Oh, maybe these little guys. And check this out. Right here, you can see we bounced off of this, acted as support here, and right there is where we're at. And let's go down a little more. Let's do this low. Right there, wow, is where I see us going at the 816. 816 would be an area that it should go to. And then we have this orange one coming down. And I'm going to thicken up this orange one a little bit so it looks more dominant, because that's going to be an area that we should find some support. I would really like to see us get down to 800. So we are heading down there. I just thought we'd chop on the way down. I didn't think that we'd do it in one, swoop like we're seeing right here. But we could certainly just keep crashing and burning. And by the end of this week, hopefully find a little support. And by next week, get a nice bounce. But I'll tell you, guys and gals, ladies and gentlemen, we're heading down in these areas. If we start making these lower lows, if we go lower than what we had put in back in November, if we go below 750, we're in big trouble. The markets are in dire trouble. And right now we're heading down that direction. What we need to happen is either put in our bottom in the big picture. Are we going to put in our bottom on the big picture here? Or, and I'm just showing you a big picture, is this going to be our double bottom area right here, or are we continuing this downtrend to the downside, heading down to here to these lower numbers? If it's going to bottom out, it's going to do it now in a relatively near future. If it's going to keep going down, it's going to prove itself really soon. So we're watching the markets like a hawk here at freetradingvideos.com. This is where you want to come to get your fix pre-market at noon and then post-market with me. You want to stay tuned to what's happening here because this is a very crucial time in the markets, and every day matters to what's happening on support and resistance and the levels that we're making or not making. So anyway, there you have it. Until next time, we'll catch you at freetradingvideos.com, and we'll see you in the forums.